What's happening, guys? Another Sunday Scam coming at you. This time it is for March 7th. We're going to start the second week of March tomorrow. And, it's a little bit different. It's a little bit different discussion than we've had in the past. We've pretty much been getting prepared for this. And, sometimes you get a bunch of crap like, all right, we've heard it enough. We've heard it enough. Okay, yes, sure, we'll pull back. But then guess what? We do, and it happens so quick you don't even know what hit you. And you look at the market and it's like, yeah, it's not really pulled back that much. But that's not what we're talking about here. We're talking about all the names that people have gravitated towards that have gone up, at an insane rate. All lost 50%. All lost 50% this week. You've got all these CCIVs, this PLTR, these NEOs. MVIS, UAVS, you name it, every single name that outperformed has pulled back at least 50% for the most part, the last couple weeks. And, you can deny and think you're good because price is proving to you that, yeah, you know what you're doing. Yeah, here we go. We keep on going higher. And I get it. And I get that it's hard to hear other opinions. I get that it's hard to hear, from somebody that has been saying something to the contrary. But the problem is, once it happens, it's too late. And I think a lot of traders saw that, felt that, learned that this week. And it's going to be a tough road ahead because I kind of feel like we're going to have a little bit more of an extension to the upside, then start to, maybe flush out again, but just consolidate for a little while. And, for me, I really dislike consolidation because that means the range starts to tighten up and we start to go in a pattern like this instead of, all over the place or in, 2020, 2021 case straight up. Straight up is great because it gives us those little moments where they take the breaks and can really capitalize on those pullbacks. But I do fear that we might start to enter a period of consolidation. I am hopeful that we don't. I still firmly believe that we are in the very beginning innings of this, and I do think that. There's just so many more millions and millions and millions of traders, especially with more stimulus coming. They're around to stay, and it takes a year or two to figure out that you have a losing strategy in trading. So people will continue to throw good money after bad. And what my thought is that we will continue to still have fantastic opportunities for the next year or two at minimum. Just like we've talked about, when and if we do pull back, when and if we do have, this huge unwind, I love short selling. And as you saw this week, there was unbelievable opportunity. So I think that it's a great reminder to make sure that you have a trading strategy, make sure that you have a trading process, because a lot of people this week learn the hard way that they don't have any of that at all. And they were just a product of a bull market, a COVID market, whatever you want to call it. You got lucky. And, that's great. And it will continue to work as long as the market continues to go up. But when it doesn't, there has to be some type of strategy behind what you do. And that's always what we preach. That's always what we talk about. We don't talk about, what to buy, what to sell. We don't talk about, P&Ls. We don't talk about all of the things that don't matter. All we talk about is developing a strategy, a process, setups that work, setups that don't work, what's working, what's not, so that you can go ahead and make those decisions on your own if you see setups forming. And that's what it's all about, self-sufficiency. So, I've got a couple notes for today. I think that I wanted to say thank you to you guys, the ones that left the comments with the timestamps like I talked about. It was interesting to see a lot of people had a lot of the same key takeaways. But just like I said, if you write, for example, 14 minutes colon 57, 14:57, it will actually queue up that time so that somebody can go through the comment section and say, oh, let me read that, or let me hear that. And you guys might go back and learn something new that you maybe didn't hear the first time. So check that out, and thank you guys for doing that. Continue to do that. That helps us, as well as usual. Like the video, please. It helps us help you, and we love doing this. So last week I think was a lot of like survival of the fittest. Sure, I had some really good market calls, and for the most part got a good piece of what happened, but it was not easy. And had I overpositioned or oversized, I don't think I would have made half the trades that I did. And I think it's easy to look back. It's easy to look at where things finished on the day and say, oh yeah, that was obvious. That was it's easier to make the call than actually make the trade, is the point that I'm getting at here. So I would have loved to go even heavier than I was on the triple Q name, the UVXY, but you just don't know. And even when we flushed out and I thought, all right, this is bottom, high or low, great. Well, 10 minutes later, it's flushing out again. And I was positioned on a couple different names that I ended up being, a little bit early on. But had I been overly sized, I probably would have sold it out at the low. But because I just, was starting to kind of get in there, I was able to participate in, the upside. Sure, I sold too much too soon. I didn't hold enough for, the period of time that, I thought that I probably should have. But that's trading. We're always going to make those mistakes. We're always going to be there too early, sell too soon. I mean, it is what it is. So I think that the key, though, is to really think about big picture. And you can't just say, all right, one entry, I'm gonna nail this thing. And you have to expect the unexpected, like we talk about. And just like we have these overextensions to the upside, we've got the same thing to the downside. And it just completely unwinds, and then flushes. And just when you think that it's flushed enough, it does it again. And so if you don't have that built into your sizing, then you're going to be the guy or lady that is stopping out at the lows. So always make sure that you have room. Otherwise, just avoid these things. Don't try to find the bottoms. Don't try to do any of this volatile type trading, because you're going to get chopped up. For me, I had a basket of names that I shared. And some of them included NEO, Plug, FCEL, AMD, Apple, you name it, a bunch of different ones, UAVS, MVIS, all these ones that had just completely come in again, and then they flushed out. And those were my buy names for me to go ahead and start in. And it doesn't mean load the boat. Sure, I should have just gone all in, but that's hindsight. But started in, they actually went lower first, added on the reversal, added again, and then they just nice, steady, slow squeeze out. And if you don't have that right mindset, if you don't have the flush built into your sizing, then you're going to end up being that person that sells out at the low. So again, trading should not be uncomfortable. If you're uncomfortable trading these things, get out of the trade. There's no reason to be. Same thing, EYES, totally different subject. But short side, 600, 700 million shares traded on Friday. If you're shorting size, if you're fighting the tape and you're nervous and you're unsure what to do, et cetera, why are you in the trade, right? So the trade should feel comfortable. If it doesn't, something's wrong. So keep that in mind. I think that, like I said, this week was a reality check for a lot of traders. I think a lot of people, finally get what we've been talking about, finally get what we've been warning about, and risk management comes into play, all these different things. And I think, what you could see is, like I was talking about, the SPY, yeah, sure, the market overall hasn't really pulled back that much. This is just normal. We're pretty much at the highs. But the ARK names, I use that as a general kind of statement. But I think it was either last weekend or the weekend before. I compared it to Icon and Ackman, right? And those were two of the greats where their returns were insane, and everybody just kind of mirrored what they did, right? Whatever they bought, they would jump in. So then when Ackman had his just complete unwind year, how many different funds blew up? How many different individual traders blew up? Because they would just mirror, because it would work. And why wouldn't it work? They're the best of the best, and ARK was the best of the best last year. So why wouldn't you just mirror everything that she does? Because you would have returned 100, 140%. I don't remember what it was, but and so what happens is that is what people do because it's easy. It makes sense. But what happens when it starts to unwind? And that's what you had this week. If you look at all of the ARK names, those were the ones that were, out unwinding all the peers, right? Because they were just so retail crowded that, there was no bids and everybody just went, out for they margined out, ran out of money. And it's not even the people that were probably positioned long for the long term and were doing okay. It was the people that were adding and adding and adding on the dips. Maybe they got into margin. Maybe they got to that point in their portfolio. They were like, oh my gosh, what have I done? And they had that panic moment. And that panic moment was Thursday and then again, potentially Friday. And the market knows that. Survival of the fittest. They're all out. And then we bounce. And so I think with that said, you should be prepared for an overextension to the other side. Like, whoa, we're going back up to the highs. And whoa, how did this rebound so far off the lows? But don't forget that was just a complete, that was an outlier event. So you got to kind of think about, yeah, sure, it flushed out to 12 and now it's at 18 or whatever, the case may be. It flushed out to 20 and now it's at 25. But where did it come down from? 35? So don't be afraid or don't be alarmed if it wants to continue to go up towards 30, right? So as much as it unwound to the downside, it can squeeze out to the upside. And then it'll start to come in. So there's going to be an overextension this way, overextension this way, and then we're going to come back. In my opinion, we're going to be, kind of sideways. So that's how I'm planning on playing this. I will obviously adapt accordingly. But that's what I think really happened. And I think a lot of COVID traders, a lot of retail traders within the past year have just done whatever Cathie Wood at ARK has done, as well as other, names that have been working extremely well. And all of that premium came out this week. So how do you fix it? Dealing with losses, and that's why I wore this shirt today. The whole next mentality, right? And you get smoked on Wednesday, you get smoked on Tuesday, you try to or Thursday, you try to make it back on Friday, and just kind of start to make it worse, right? So, in my eyes, the sooner that you can kind of reset, refocus, and ground yourself to, okay, I screwed up, but this is what my account's at. This is what I have left. And the only thing that I can do from this point forward is focus on what got me here in the first place. And if this is your new ground level, how do you start to, trend back up? And, how did you get from, where you were to where you are, right? It wasn't by going through and going for home run. And for some reason, people start to go for home runs after they get smoked, right? So, you might have made a decision Thursday or Friday. Maybe you're going to make one on Monday where you're going to say, all right, I got smoked last week. All right, maybe I can make it back on this one. I'm going to go double size. Guess what? If you're wrong, you're going to have double losses. So make sure that you are going in with the same kind of thought process, same mentality of when you were trading well. We tend to change things. We tend to try to fix things. And that's just not how it works. So whenever I have my biggest losses, I went over this on a prior video, and Cam, pretty much my partner on the website, would always tell me the same thing, and it'd go in one ear and out the other, and then it finally just clicked. Like, he's right? Time fixes everything, and you have to think about some other date in the future, not tomorrow, not next week, but in this case, I put on scan an example of summer. Summer is coming. That's why I mentioned it at the beginning of this scan. So if you got smashed this past week, you're not going to make it back in the next couple days. But let's think into summer. Let's just call it June 15th, or we can call it June 14th, because that's my birthday. As your goal, you want to look forward to that date, and you want to get to, let's just say, X. How do you get to X? And when you cut that up into each and every single day, you'll realize that that goal is attainable. If you try to hit that goal tomorrow, you're going to go backwards. And this ground level in your account is no longer going to be the bottom. So you have to make small steps forward. And before you know it, it might be May 14th and you're already there. Before you know it, before you, think that it's, before you are expecting to get there, a lot of times you'll figure out that you get there a lot faster because you just got back to the process. You got back to what was making you money, what was making you a good trader. And that is the most important part about trading, because most people decide they're going to change stuff to fix it, when in reality, they just have to go back to what they were doing before. So when you think further out, you're going to make your goals attainable. Smaller goals, they add up over time. Time fixes everything, and that's all you really need to focus on. And before you know it, you'll be hitting those check marks sooner than you think, because you've gotten back to that process. What else do I have for notes? Only as good as your last trade. Yes, we know that. Consistency, focus on consistency. Yes, there's so much noise out there. Lots of people are killing it. Lots of people are getting murdered. But focus on you. You're never going to be happy if you focus on other people. Okay? You're never going to be happy. So you've got to find out, where you want to go, what fits your personality, and what somebody else is doing may not fit your personality, and you'll find that out real fast. For me, you want to try to find that happy medium, where the stress level is. And again, you want to feel comfortable in the trade. Every day, if you're trading and you don't feel comfortable, change something. Volume trumps all. That was related to eyes. And I think, even a warning for me, on eyes, I was focused on, just zoning in and getting a good read on it. But because I was watching that one, I did not focus as much as I should have. CCIV, PLTR, AI, and a bunch of different names that just had these insane rebounds. I was long on both PLTR and CCIV, but I kind of trimmed it off. I was a little early. Then I added into the strength, and then I was happy to get an okay profit. So I moved on, but they continued to go. And I feel like if I was not focused on all the other names, or in this case eyes, and focused on better edge, I feel like I probably would have traded even better on Friday. So getting into scan this week, before I get into the charts and things like that, my kind of thought process is continue to have that shopping list. What names do you want to buy? What names do you want to own? And when you have those opportunities like we had this past week, it doesn't mean that it's going to be long term, right? So, in this case, I feel like I got good prices, and I feel like they might overextend to the upside, but I'm going to be looking to be a seller. And then I'll look to reposition it at some point in the future. But I will continue to trade those opportunities until we start to tighten up, and then I'll start to look for, decent swing trades and things like that again. But my thought is, everything's expected. So everybody's going to be like, woohoo, we've got stimulus. It passed, and then I think they vote on Tuesday. I don't know if that's Tuesday into Wednesday. I think it's into something like that. But, I feel like everything's priced in. I feel like everybody is expecting it. But I also do think that we could continue to head up on the headline. But I would be cautious thinking that the strength attributed to passing it at the house level and all that good stuff, I feel like you should be cautious saying, okay, that's it. Like, we're good. We're back to the highs. Because I feel like it's going to be a crutch for the week, and then we're going to start to fail again. That's just my thought. But I will, as you've seen the last couple of days, I've put my thoughts prior to the day on what I think the market's going to do. So far, it's been pretty good. So far, I've probably underperformed given, how spot on the calls were. But, that's trading. It's easier to make the call than, make the perfect trade. So, the only fear that I have in this current market is just that tightening up. So, you've got this steady up, this flush down, this squeeze out, this panic, and then a period of consolidation. And that consolidation period is when, you need to realize that, hey, we're in consolidation mode, and don't, push too hard on any one side. Otherwise, you're going to get chopped up. So I think that's about it. This week, Dave Francis, you've got free t-shirt coming your way. And this month, Liberty Fay, you've got a free month of IU. So once again, all you guys have to do is like the video, leave a comment, your key takeaway. And each week I pick winners, whether it's Icon Meals, IU Chat, scans, t-shirts, you name it. We like to give away free stuff. So that's it for the first part of the scan, and we'll get right into ideas and watch list for tomorrow. The second part of scan, typically I go over what I am looking for. As always, disclaimer is below. We are not providing any buy or sell recommendations. This is for educational and informational purposes only. My goal is to potentially let you take one thing at least away from each scan to make you a better trader. And when I go over what I'm looking for, ideally something clicks and it will allow you to make a better decision in the market. But as usual, if you're looking for somebody to tell you what to buy or sell, you're in the wrong place. I'm sure you can find somebody to do that online, but it's not happening here. So, when I get prepared for the market, I always try to look at, the overall, market sentiment, what's happening, what's the current state is. And obviously, we were starting to get a little bit heavy. Obviously, at any point we could pull back. We finally did. So as things start to unwind, for me, I try to look at the ones that have unwound the most and have yet to bounce. And when that happens, my goal is always gap down, flush out, and rally. And so for those of you guys that are members, obviously you saw Thursday and Friday my shopping list. And my shopping list included stuff like FCEL, NEO, Plug, AMD, TTD, AMD, I think I said that one, just a whole bunch, right? PLTR, CCIV, all these names that have literally pulled back, cut in half, and then have yet to flush out, right? So in my eyes, the edge is when we start to speed up in any one direction, right? So just like, somebody trying to find the top on a short squeeze and getting run right over, well, same thing on the downside, right? So a lot of what you saw last week was not necessarily people bailing out of their long positions, that they've been holding for a long time. In my opinion, it was dip buyers from, like Wednesday, Thursday, Friday. And so they kind of position, and then second guess themselves. So what happens is a lot of times, you've got this understanding that you just buy every single dip and it works out. But what happens when it doesn't? You hold on for a little bit, and you're like, oh, I didn't know that it could go down this far. Okay. And then it goes down more and you freak out, you panic sell. I think that's more of what happened last week rather than just people that have been holding and they're up nicely and then it pulls back 50% after they made 100%. I don't think it's that. I think it's dip buy, dip buy, dip buy, dip buy, freak out. And that freak out is what provided us with those opportunities, NEO and FCL, plug, the same ones that I listed off. So point being is that as much as we've pulled back, don't underestimate how far we can extend back up. Now, the faster we go back up, I feel like it might be worse for longevity because what happens is, you do this like zigzag and then you start to consolidate. Or you do this zigzag, shoot back up, and then the real panic comes. Point here, who knows? We just have to prepare for both. We have to have a game plan. So, with that said, don't be a perma bull, don't be a perma bear, and kind of come in unbiased every single day and see. It's okay to have an opinion, a goal, an idea, but make sure that it aligns with what's going on. And if you're saying, oh, it has to bounce, and you're adding and you're adding and you're adding, you're going to be one of those ones that freak out at the bottom because it becomes a risk management thing. You're in too deep, and now it's about protecting capital. And unfortunately, a lot of times when you protect your capital in a emotional state, usually that's the bottom. So the key is always, if you're not sure, if you're unfamiliar, uncharted territory, stay out. Just stay out. It's okay. Cash is a position too. You don't have to trade this stuff. And it's this type of chop that really, takes the millions of traders and cuts it in half. So be cautious. So first and foremost, TQQQ. You could also trade SQQQ. It's the opposite. You could go long when you want to short, long, whatever. But they're opposites. So it just depends on what you want to do. Personally, I like the higher priced. When they have big range like this, I like the higher priced because I can put more capital to use and appreciate that, the percentage moves that it's the range that it has. I'd have to trade, 8 times, 10x, whatever it is. What is SQQ? $14. So, what, 6 times, something like that. The amount of stock I'd have to trade on SQQQ to have the same amount of, money risk in the market. So, for me, I'd rather just trade smaller size and actually have more money at risk in the market with something like TQQQ. Anyway, thought process here. I took it off into the close on Friday. As you guys know, I tweeted out pre-market that I felt like it'd have like a week open, a ramp up, and then do a gut check. Make sure, are you sure that was bottom yesterday? How confident are you? One of those types of things. Are you double checking whether or not everybody, was comfortable buying that dip on Thursday? They flushed everybody out, and then I figured it would absorb and just kind of trend up throughout the day, and that's exactly what happened. And, sure, the call was perfect, but was my trade perfect? No, I sold way too soon. I didn't size enough. I could have done a lot more, but that's trading. So it's good to have the right idea. It's good to be reading things correctly because it allowed me to nail a couple other things like FCEL and plug and NEO and all those others. But when you're sizing and trading and actually in the action, it's a little bit more difficult, especially if you have some size in there because these pullbacks that you see, even at this little level here, you think it's finally rebounded and then it flushes out to new lows. That's difficult. Same thing with PLTR. You got this nice flush right here, and it rebounds. You're like, all right, how much lower can it go? Oh, guess what? It can. It went another $2 down, right? So if you're positioned in and you're like, all right, finally held trend, and then they just pull the bid again, that's hard. And there was another one, CCIV, which I was there, but I was a little early. So because I was early, sure, I had the right idea and it worked perfect, but because I was early, I didn't really want to be sizing into a loser. I didn't really want to get too aggressive. You don't know if CCIV is about to pull what PLTR just did and drop another 2. So it's not easy. Don't think that it's easy out there. It's choppy, it's hard, and it really comes down to positioning correctly. If you over position on things, you're going to second guess yourself. You're going to get chopped up. I guarantee it. And so just always, you don't need to be a hero on these things. When these things provide this type of opportunity, you got to think big picture. You got to assume you're going to be early. If you don't assume you're going to be early, you're going to be the person stopping out at the lows. So with that said, ideally gap up, some type of overextension, pull back, consolidate. I think we'll be in a holding pattern until it goes to the house, the bill. So I think we have morning emotion, rip, pull back, consolidate until maybe into Wednesday. We'll see what happens. OXY. Really nice trade. I was early on it. I did not size. I had a couple entries, but it was my first time trading this one in a while. I think the last time I probably traded it was back, when it had that first drop, and maybe around this day over here in June. It ended up, fading back off to the lows and before this massive bull run. But you should be watching it with the USO and XOP and all these other crazy gas names. But OXY, definitely like it. It's coming back into key levels. I want to stay familiar with it, but this is a sector trade, so don't treat it like a small cap. Oh, it's overextended, it's going to pull back. No, it doesn't. Watch it with the overall trend. You're not going to miss it, because when the oil, gas, all these names start to pull back, it's going to be a slow and steady unwind. So you're going to want to create a list of all these overextended names. The MTDR was another one that I have on watch. But start making a list of all these names, because when you have that list ready and you start to see oil come in or whatever it may be, you want to go to that list, because that's going to be your edge. Just like, why am I trading PLTR, FCEL, Plug, NEO versus, Apple, right? Yes, I'm trading Apple too, but why would I prefer to focus on those other ones over Apple? The opportunity. So in this case, you want to start compiling a list of all these overextended names. For me, I prefer to stick with super, super heavy volume. The higher the volume, the more liquidity, the better for me, because I don't have to worry about that one candle swiper. Something like MBR is a huge, huge, huge move off of the 20s, major recovery, but it's trading 200,000 shares a day. That's difficult. If you start to size in and you've got one candle, 2 candles that can swipe you out, it's not worth it. NEO. So anyway, with OXY, to go finish that thought, watch with the sector, reactive trade. I got a good portion of this trade. I can post the trade for you guys. I actually started in not a great average, but what I was focused on was 3130s. Once 3130s, 3150s, 3130s started to peak, that's when I knew I had an edge. That's when I knew, we potentially flush. Anticipating that flush is my opportunity. I'm not looking to be a hero and get the whole trade. I just want to be able to size in and take the meat of the move on. That's it. Because we're in a market where you could be dead right, and then 1 hour later you're dead wrong. NEO, nice reactive trade. Once again, it's a good example of, how much lower can it go? And then it does. So, I had started in on Thursday. I had sold out my trading accounts into the close on that, nice opportunity, but I still had some. And had I been too positioned, I probably would have been panic selling. But because I was, waiting for this flush out to happen, I was able to get in there. And you know what? Yeah, I dabbled a little bit. I ended up, I think, buying maybe in the high 34 range after all of this. Yeah, I would have loved to be into the lows, but had I had that mentality, I would have been over here, and I would have been, a buck or two too early anyway. So I always don't mind buying dips after the trend starts to confirm. Thinking overextension here. I'm thinking that we could potentially gap up 40, 42 push and then start to settle out. That's a big move. That's a big potential. But I do think it's possible that, given how this thing is trading, we're into almost 39s now. I could see a gap over 40, market permitting, obviously. If we gap down 400 points tomorrow, then, forget it. But I could see us opening over 40s, or rip up, squeeze out to 42, and then potential settle off. Failed follow through momentum. As you guys know, I always split this scan up. So if you click through the link in the description, you'll see it's, my main watches, failed follow through, continuation, and then some others. But again, I don't have a ton on watch. I'm not preparing for a ton because we're not in that type of market. We're in a market where we're having small cap style momentum on, Twitter and pins and the market, TQQQ. So you don't have to prepare as much because you might just be wasting time. So that's why this portion of the scan is a lot shorter than usual today. WKHS, higher the better. Every single time it's ramped up, it's faded off so far. I still do have the same thought process that, we're going back to singles. But the only thing with this is there's just so many headlines that are jumping around. You have to size in my opinion, with the assumption that you might get swiped up, a $1.50. And if you're not okay with that, avoid the trade completely, because it's already happened a couple times. Granted, it's come right back in, but I do think this is the long road to fading back to single digits. And they keep on putting out headlines. Oh, we're going to fight this and fight that. And it's just getting more and more crowded on the wrong side. So I think the more they do that, the more liquidity event is available for those that are now on the wrong side. Also, Kathy Wood keeps on adding, and so as we discussed earlier in the day, that's your retail folks that are probably going to be making the wrong decisions. Eyes, pretty crazy. We spent time in the lounge on Friday going through this and walking through this entire process, walking through the mindset and the why and the how. So if you are a member and you did record your screens like I suggested, make sure you go back and check out the chat logs in the Traders Lounge. It was very eye-opening, big squeeze out. They walked. And even where, I thought that the levels would hit, to the point where, it was spot on to almost the penny. Now, does that mean that I absolutely crushed the trade and nailed it? No. There's an edge. There's a thought process. There was definitely great trade opportunities. I definitely did not trust it to the long side because I thought it would end in just one candle, just like you see. You see that it ended in one candle, but that doesn't mean that it can't keep going, right? So, could it have ended in one candle over here? Yeah. And that's why I didn't trust it to the long side. But it ended up, hanging on for quite a bit longer. So either way, I think that we might have one more push out and then, fade off. I think there's a lot of people on the wrong side of this trade now. Unbelievable volume. Once again, volume trumps all. Always remember that. Great opportunity. I think this could be an attention getter. And what I mean by that is, if you're focused on this, I think it'll be a good trade for a lot of people on a smaller scale. You might have that push out and then starts to fade off. But if you are focused on getting and nailing this trade, just like on Friday, I think you're going to miss everything over here. You're going to have your blinders on. And, that's one thing that I could have done better on Friday is not have my blinders on this and start to focus on some of the other bounces as well. So, reactive trade, possible 550 push. I don't really think that it would go too far. I think a lot of people are now on the wrong side of this trade. I think they squeezed everybody out, and I think they walked in a big way, but we'll see. BGI, so far so good. This has been an idea for quite some time. It actually was an early idea, same kind of thought process that we've talked about, same type of daily chart. was a nice trade, and then obviously everything kind of went to crap. So I had a good trade turned into a bad hold, turned into a good trade. So we'll see what happens. It's difficult right now. It really is on swing trades because I've had a lot of good trades. SLGG was an amazing breakout trade. Absolutely crushed the idea from sixes to nines. Sold a bunch after hours into the nines, but I wanted to hold some, just in case. Yeah, that was a bad idea. So I go from having this huge unrealized P&L on the other basically third that I had left to it turns into a loser. So it's been a difficult time with do I let this trade work or do I cut it off or do I take the profits? So that's sort of the market we're in right now, and so BGI is working great, but is it going to continue to go to 4, 5, 6, or should I be locking in? So as always, you should always trim along the way, but so far it's been a great idea for anybody that's paid attention. So PMSD, no position here, but like the setup here, you can see the wicks that we talk about, potential continuation type trade. I'll be watching this one to potentially get involved. NNDM, I don't think, I might have it. Let me see. No, I don't have any NNDM. I did trade it on Friday. But same deal, lower the better. I'm looking to position in. Not because I think that it should be valued at any price whatsoever. I just think that it's come in so much that any flushes are going to be opportunity. I don't want to buy breakout, but flushes are going to be opportunity for me, in my opinion. They're flush with cash. They've raised so much at such high prices. It was incredible to watch how much they've done. But OSG caught my eye. Nice big swipe on the daily. These are the types that, if it starts to form a trend over this current level where it's, pretty much 240s. So, if 240s, 250 starts to base, then we might actually have a nice opportunity here. You can see the volume picking up over the last week or two. So that might be them positioning in for this next leg up. So, let's keep an eye on this. If it starts to base 230, 240, 250, you might see that leg up towards, 3, 4, 5s. And that's pretty much it, what I'm prepared for. Again, if you click the link on the description, you can go through and check out the other trades. The positions that I have are on Plug, FCEL, MVIS, BNGO. Those were all ideas on the shopping list. I call it the shopping list because, I want lower the better, flushes, opportunity, right? And so we had those. The reason why I picked, the one BNGO, UAVS, MVIS, and GIVO were the main four for the small cap momentum shopping list. And the reason for that is just because the sheer amount of volume higher, the lower it goes, the point where it flushes out, there is going to be a big rebound just because, the amount of folks that bought so much higher, they're either going to average down or they just blew out, and there's going to be that, overextension of the downside that we talked about. So obviously this market risk, if any of them, I haven't looked at the filings, but if any of them did, filing, that would change things. An offering, but technically speaking, those were my top 4 for the shopping list on small caps into the flushes on Friday. And the reason for that is just because of the charts in itself. Technical analysis, just this capitulation of share price. And, with that said, don't be alarmed if they extend further. So what's going to happen a lot of times, I'm not saying that it will happen, but a lot of times it does happen in situations like this where they gap up, they squeeze out. But you got to remember the shareholders here are those cult style, everybody's wrong, I'm right type of traders. And they're still going to be holding as it goes back to 1. But in the meantime, short's going to say, oh, that was a huge bounce off the lows. It's got to be a fade here. So in my eyes, we're going to have this flush Friday, comes back, consolidates, squeezes out, starts to pull back, and then that secondary leg. That secondary leg is going to be a nice squeeze too, in my opinion, and then the fade. That's how I typically kind of get prepared for that type of situation. So I have a couple other ones on there. You can check them out. CCIV, PRPL was a nice, nice ranger, nice rebound the last 2 days. Pretty nice squeeze out. But that is about it. If you guys have any questions, you know the drill. Reach out. Always here to help. As always, like the video, please. Leave your key takeaway. If you put the timestamp, that's always helpful to everybody else. Otherwise, have a great weekend, and we'll see you in the room.